August, a notoriously and historically bad month for the stock market. Will this August be any different? Let's look ahead. Welcome to Trading Nation. I'm Brian Sullivan. Max Wolff of Manhattan Venture Partners and Wald of Oppenheimer are your guests today. Max, what say you? Will we follow the the August tends to be bad theme, or is this time different?
Yeah, so it's a really tough call here. What we've been seeing is the fundamentals are sort of headed south. We had another lousy quarter in terms of earnings growth, and yet the bid was there big time. So whether that's various central bank policies, some direct interaction, or a relief rally that it wasn't even worse, a lot of the rules are out the window. So in politics like economics. That being said, we see some pretty heavy multiple stretch on a lot of names that are pretty battered. So we'd be quite defensive, although we've been that way before and we've been wrong for a couple months. Can't really see getting off that train right now. Feels like you'd be dropping out of college in May of your senior year. So we're going to stay pessimistic.
Staying pessimistic. All right. Wald, are the charts more optimistic or more pessimistic?
The charts are more optimistic here, and I think the important message is if you get some seasonal weakness, you want to buy it. But let's dig into this seasonal data first here, and let's set it up like this. The chart I brought shows the performance of each month for the S&P 500. But we're putting a little bit of a different spin on it. We're looking when the index starts the month above its 200-day moving average. So essentially, seasonals in an uptrend. And actually, in May, we made the case that don't sell in May this year because it's unreliable. The trend is more important. And actually, May, June, and July, S&P tends to perform pretty well when you're in an uptrend. However, uptrend or not, seasonals are very poor right here. From August into October, in fact, August, when you start the month in an uptrend, has actually averaged a loss over this period. Now, historically, investors have been able to counteract that by rotating into consumer staples, the best performing sector over this 3-month period. Here's the key point. Here it is right here. Consumer staples, one of the most expensive sectors in the market right now. In addition, internal breadth, the broadest it's been going into August since 2013. So we're making the point that we think investors are going to have less incentive to rotate out of cyclicals. We think it's going to be muted this year. More importantly, you want to buy it. Don't time it. We want to be invested in this market. We like the breakout in equities. We're bullish.
Okay, bullish there, but noting that staples a little bit expensive. Max Wolff remaining a little bit pessimistic. That's why we do it both ways. Should be an interesting month, guys, especially with what's going on with the price of oil.